CCI Indicator strategy. This may be the most simple strategy to help turn your trading around. And the key is it can help you stay on the right side of the market. You know, that's huge, right? You want to know, is the market bullish or bearish? Markets are binary. And how do you know? Well, this indicator is a mathematical way. Remember, that's what indicators are. They're math formulas to help you determine whether the market is still bearish or bullish or neutral. And of course, that is a third option for the market to be neutral. And it's a very simple indicator to read. This is what I love about it so much. So here it is. So first I'm going to show you how to read it, and then I'll show you how to trade it. So we've got 5 levels that we're going to put. Oh, by the way, get this all the time, which is good. People ask what period am I setting the indicator to. So I use 20. A lot of people like to use 14. I prefer 20. Feel free to try both. So first of all, we've got a line at 0. So as would make sense, logic dictates 0 is neutral. So when the indicator is around the 0 level, that means we're in a neutral market. Probably just want to stay out. That would be a warning of a choppy market. 100, positive 100, that's where we start getting into bullish territory. We're getting strong moves up, and therefore the beginning of a trend. 200, positive 200 is extremely bullish, probably not sustainable. But again, we're going to combine that with looking at where we are in a trend. And then to the bottom side, now we get into bearish territory below 0. So negative 100 is bearish strength, and negative 200 is very bearish strength. And as you can see, it doesn't stay below negative 200 very often. It doesn't stay above positive 200 very often. And this is kind of the sweet zone. But how do we read that, and how do we make money with that? So let me show you. Here's exactly what we want. This is a bullish trend, and this is exactly what I'm talking about. So what we want on a bullish trend is we want the market to have strength on the move up, strong money flow, strong buying, strong demand. And sometimes that could be hard to tell. I mean, sure, the bars are moving up, but then on the retrace, what's going on? So the key to it is this: strength up, and then yes, we're going to get oscillations, and we're going to get higher highs, higher lows, higher highs, higher lows, higher highs. The thing is, we want this move up to be strong. We want the move down, the retrace, to be weak. And when I say strength and weakness, I'm talking about the money flow. So lots of money coming in, lots of demand coming in, and sure, market's going to come down a bit, but we want that to be, just retail selling, shorting, and maybe some profit taking. How do we know, though? We need some sort of objective, because anybody can look at price bars, but we want to see something inside of price. And that's where this indicator comes in. And let's see. So now it's very bullish, so I'm going to actually rescale this a little bit so you can see the whole indicator there. And this is a perfect example. So we are finding that the market it's going up. That's fine. And here's our 0 level. Remember, 0 is neutral. So as long as the market's going to continue trending up, we want to, first of all, so we stay out of choppy markets. If the indicator, which is the blue line here, if that was just hovering around 0, I would stay out of the market. If it didn't reach 100 or it didn't reach negative 100, that means there's no strength to the upside or to the downside. So it's got to first hit 100 for a bullish trend, or negative 100 for a bearish trend. If it doesn't do that, if it stays within this range here, hovering around 0, then it's a choppy market. I'm not going to trade. So it also has a benefit of helping you stay out of choppy markets. Now, once it goes up and the indicator hits positive 100, now I'm looking for a bullish trend. I'm going to buy them on the retrace. But how do I know if the retrace is strong or weak? How do I know if, we had some bullish buying, as we talked about, but how do we know if we're not going to get some major short selling on the retrace? And this is the key. So as we look at this, we see that it stays above. Really, all we needed to do is stay above 0 or stay around 0. I don't want it to go back to negative 100. If it went back down to negative 100, then I would stop buying the dips. And this is an even better situation because it never even gets back to the 0 line. stays, as you can see here, with my beautiful artistry and my steady hand, it stays completely above the 0 line. And so it's just strength, 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 strength. And it never gets to 200, which is also good. Because if it gets to 200, as I showed you before, 200 is not sustainable. And that would be considered a very strong bullish move for sure, but it could be an exhaustion move. And therefore, I might not want to stay into that trend anymore. It could be the end of the trend. I always like to show bullish and bearish examples. And so here's a bearish example. So price comes down and it makes a lower low. It makes a retrace. So here's our retrace. Notice here we had been above 0, but didn't quite get to 100. Now we get down to negative 100. So that shows what? Bearish strength. So now that's what we look for first. Then we say, okay, we're not just in a sideways market. We're not just in a neutral market. We are in a bearish strength market. Now, we're not going to take the trade yet. We got to wait for the retrace. Price retraces up, and then we say, okay, when it retraces, is it retracing on weakness? And the answer is yes, because it doesn't get above the 0 line. It doesn't get back up to a positive 100. Went down to below negative 100, so bearishness. The retrace is weak, and therefore we can take this short and we make a lower low. Now, when we come back up, here's another retrace. So I want to take this one. So it's not quite as good, right? Because we have strength back up. We cross back above the neutral level of the indicator. And we actually reach positive 100. So that's showing that, now we've got bullish strength again. Nah, I don't want to short here on this retrace because we've got bullish strength. So while the trend is technically down in direction on the price levels, no, the energy is up. And then, of course, it goes up and it makes another higher high and we're down. Okay, so we're just not going to take that trade. And that's how we determine that this is a good retrace to go short. And this is a bad retrace to go short. The other thing is, when do I determine that we've actually made a cycle high or cycle low? And for that, you can get my cycle indicator, my market timing indicator. That tells you exactly when this cycle high has been put in, or, for example, this cycle low has been put in, so you can get out. And that you can get at indicatorwebinar.com, absolutely free. And I give you a tutorial on it, how to set up your charts, everything. It's actually another common indicator, but I modify that one. CCI, I use, the only modification I change on it is I change it to 20 from 14. But my cycle indicator, my market timing indicator, I make a number of modifications to that, and how to trade it, it requires a little more details. So we put together a whole recording on that, but I give it to you for free. So go check it out. My gift to you.